Good morning, George Cavaligos from Naked Trader. It's unemployment morning. It's actually quite early here before the population gets down to the floor. I want to get this levels out to you real quick here. We've been talking about a lot of different things this week. Yesterday's rally shook my bearish confidence a little bit. I got some interesting emails. Thanks, guys, for that. Appreciate all the commentary and the support. Looking at today, the markets are opening up a touch weak here. We're seeing some big put buying in the euro dollars, a little bit of hedging. I think there's some concerns about some LIBOR tightness here, so we want to keep an eye on the front euro dollar contract, the March contract today. It was under a lot of pressure yesterday, and keep an eye on LIBOR rates here, not just in the States either, but there's been a lot of chit-chat. I know my friend Rick Santelli's been talking a lot about LIBOR rates over in Europe, and a lot of tightness there. He actually thinks that some financial institution is in trouble over in Europe, and we're going to see some problems with that. Moving on real quick, get these levels out. The March euro dollars, the red March. Market's trading really soft right now. We're trading 98.84. That's the low from the night before last. The low of the week is 98.82.5, and we're just sitting right above there. All the volume that we've seen go through really over the last couple days or the last week or so has been on the downside. Hopefully we can get a number that is not as bearish as we thought, and we get a little bit of a rally. I'd love to see a trade back up. There's a neckline formation up on the red March up at like 98.98. That would be a pretty big rally from here, and that would be a great selling opportunity. Yesterday we got up to 98.90. I was hoping we could get them up a little bit higher there. It's going to be tough to try and pin these levels exactly. Markets are getting a little bit more volatile. Yesterday's high was 98.90. I thought we could, maybe sneak it up to 98.93, which was the big resistance area there. On the downside, the recent lows from a couple weeks ago at 98.77.5, and the lows from a couple months ago, which is my objective there, in the low 60s, 98.61.5 on this contract. We'll see. Obviously, the unemployment number is a big deal. The markets probably have priced in a positive 200-ish number. After all the sort of estimates we saw after the ADP number came out, very powerful. They pushed their estimates up. Most headline economic services are around 150,000 increase. I think the whisper number and what the number that people have in their minds is more like a 200. So I think it has to be over 200 to give us a really bearish trade here. Anything below 150, I think, is going to be a little friendly for the market. Maybe even, maybe even very friendly. So we'll see. A little short position. I really like having a small short on into the number here. It's tough to have positions into these non-farm numbers. They can be very whippy and very violent. So you got to be very cautious here. We'll talk to you in a little bit.